So what is exactly happening to Chinese stocks? So I think that was a unanimous reaction amongst international investors that are still hodling Chinese tech stocks. So I think we need a moment of silence for the warriors who are still holding up. I think you guys deserve it. Anyway, when the Hong Kong market opened yesterday, the Hang Seng Index was down 7%, closing at the $15,000 support level. And Chinese tech stocks across the board were down between 10 to 15%. Yes, 10 to 15%. We are talking about equities here, by the way, not cryptocurrencies. I mean, Chinese tech stocks might as well create their own version of NFT because of the sheer volatility. Interestingly enough, if we were to contrast the movements to the local Chinese equities market with the Hong Kong exchange, both the Shanghai and Shenzhen index was down around 2% on Monday. Interesting, isn't it? That said, it's not as interesting as the like button, so make sure to tap on the interesting button. I have good news. By the way, Webull has recently extended their latest sign-up bonus reward of up to $130 worth of Tesla shares for new users until the 1st of November 2022. All you have to do is to sign up for a new account with the link below and deposit at least 2,000 Singapore dollars and execute one buy trade for a stock or ETF and one option, and you get an 8% ROI from your sign-up rewards. Webull prides itself on zero commission trading, so let's stop paying all the unnecessary commissions and use it to buy more Alibaba. For existing users, feel free to get your friends to sign up using your own referral code, and you can refer and win up to $6,888 worth of Apple shares. Details will be in the promotion page itself. Webull has also recently enabled GTC orders, good deal cancelled. And as you know, because of the recent volatility in today's market, you need not check your portfolio on a daily basis, but instead, place your buy orders at your own desired price point. And those buy orders will remain in effect until it's filled or cancelled, and it saves you loads of headache. Link in the description below. You have probably been bombarded with a whole arsenal of different explanations and also expectations from both the mainstream media and also online creators on the 69 reasons on why the Chinese stock market experienced such a collapse in one trading day. So there are probably merits on both sides of the argument, but I'm more interested in teasing out the contradictions that I've observed and provide you with a different perspective. I'm not here to speculate on the reasons why. But before we begin, I'd just like to take the chance to congratulate Chairman Xi for his successful re-election. Now, some of you might be smirking. Why do we have to congratulate Chairman Xi if we already knew he is going to be quote-unquote re-elected, even before the party congress started? And that's exactly the irony. So in his second term, most investors or even political commentators are already aware that he has explicitly laid out his intentions of removing the two-term limit. So it's not like it came as a surprise. But it does seem like the main quote-unquote reason for this leg down was because Chairman Xi became a modern-day emperor of some sort, because he installed all his allies into the Politburo Standing Committee, basically monopolizing power in his own hands. So for context, the Politburo of the CCP is the highest decision-making body of China that is led by a group of 25 top Chinese officials. And within it, the power is further centralized in the Politburo Standing Committee, and Chairman Xi is in it. And many commentaries are saying that the 6 others who are in the Standing Committee are basically Chairman Xi's yes men. So I do personally have a few issues with it. Firstly, in the first 2 terms of Chairman Xi's administration, I think he has been launching many high-profile campaigns under the name of cleansing the system of corruption. And critics are commenting that those are just pure mechanisms to purge his enemies. Secondly, I think it's clear as day that if he is able to make such huge constitutional changes, such as removing the two-term limit with relative ease, I think it doesn't really come as a surprise that he's able to consolidate power in his own hands, isn't it? So what exactly is the surprise here? Now, I do understand that absolute power corrupts absolutely, but I guess this is where we slightly differ. So skeptics think that Chairman Xi currently have absolute power, but I beg to differ. So I think it's quite fascinating to believe that one man, just one man alone, really has absolute power over a 1.4 billion population. don't misunderstand by the way. I'm agreeing to the fact that Chairman Xi has a great deal of control and power and authority over whatever that's happening in China today. But to think that he has absolute power, which also means by extension that there will be no repercussions if he screws up, which is the definition of absolute power, I think that is a little bit hard to believe. Now, there are many discussions around the escorting of ex-chairman Hu Jintao and how it's a staged interaction, essentially trying to send signal to current and maybe even future members of the CCP and the world that this marks as a change of an era. Truth be told, nobody knows what exactly transpired, and all of us on the sidelines are basically just speculating with all the different conspiracy theories. Personally, I'm tending towards Hu Jintao being unwell, because if you have watched the entire clip, it does seem like he doesn't really know what's exactly going on. Moreover, if Chairman Xi doesn't want him to be around, he wouldn't even have a seat at that table. But this is of course my own interpretation. So for those of you who are making a big hoo-ha out of this interaction, go read up a little bit about the history when Chairman Hu Jintao was in office. He was never a threat. Now, I think here comes the interesting disparity. So the Hang Seng Index, which is the Hong Kong index, was down 7%, while local Chinese indexes are down 2%. So what does this mean? So let's first understand the psyche of the investors in the different markets. So the Hong Kong market is much more catered to international investors, because under the one country, two system framework, Hong Kong has successfully established itself as the financial hub of Asia, right beside Singapore, for quite some time now. So on the other hand, the local Chinese market is pretty much shielded from the outside world because of the myriad of capital controls and accessibility issues. Now, I know many people are also extremely concerned about the potential war over Taiwan because in Xi's recent speech, he reiterated China's commitment over doing whatever it takes to reunify Taiwan. So for some context, this is the Russian stock index, and it's currently trading at around 2,000 points. I know many investors have been ridiculing the Hang Seng Index because they essentially experienced a lost decade. So from the 9th of April 2009 until today, the Hang Seng Index is essentially flat. Compared to the Russian index, in the same time period, they have at least 2x. So even after accounting the fall in valuations because of the sanctioning risk after the Ukraine war. So truth be told, if you were to just show me both charts, I would have think that China is the one at war, not Russia. So long story short, I don't necessarily think that the drop in valuations were unwarranted, because it's true that there's a great deal of uncertainty ahead of us, especially when Chairman Xi recently just reiterated his signal to the wealthy as he opens up more opportunity for his quote-unquote common prosperity push. But then again, it's not like this idea of common prosperity is a new introduction. So I'll leave it to you to decide whether this is an overreaction or not. So funny thing though, whenever we discuss about the topic of common prosperity, everyone focuses on the idea of common but ignores the word prosperity. So I've recently came across this opinion article on South China Morning Post, and just a disclaimer, it's owned by Alibaba, which is probably biased towards China, with the title, How China Can Promote Common Prosperity and Still Keep Economic Growth Going. So I think it's slightly biased, but it's also good to have a different perspective. So I'll leave the link to the article below if you're interested. So only time will tell whether it's common prosperity or common poverty for China. At least for now, we can throw fundamentals out of the window because it's purely driven by macro predictions and expectations. With that, I'll see you in the next video, but more importantly, I will see you on the moon. And this is our version of mooning for now. Goodbye!